I just quickly want to refresh your mind. Yesterday I said when we do manufacturing, first thing, they like working in threes. So the first three that I taught you was the 3 departments, and I taught you how the expenses is divided between the 3 departments. You are still fine with that? Okay. Then I said the next 3 has got to do with your stock. And you got 3 types of stock. The raw stock, meaning there's the tomatoes lying there. It's not been transformed into anything yet. Then the work in process stock is where the tomatoes are being taken to be squashed into tomato sauce. Then the final good stock is once it's in the old gold bottle, ready to be taken to Hyperama. Okay, so that's my 3 stocks. And all 3 of these stocks works with the same principle. I have an opening balance, it becomes more, it becomes less, and I've got a closing balance. So if I look at the raw material, I have an opening raw material, it becomes more if I buy it. Just by the way, if there's carriage or customs, it's also added here to the price, right? It becomes less if I return some of the stock. But the most part that makes it less, the biggest part of it, is when raw material is issued to work in process, meaning to the factory floor where they are busy making whatever product, right? Work in process, same principle. I have my opening balance of stuff that's half finished. I have my closing stock of stuff that is half finished. Because always keep in mind that the last day of the year, is just a day before the first day of the next year. There's literally like 1 second between them. Right. So business continues as normal. It's just in our books that we divide them into financial years. But business goes on as normal. So, what makes work in process more? The cost of making the product has got 3 parts. Again, 3. First of all, my normal expenses, my overheads, water and electricity, rent, depreciation. Indirect labor, meaning the girl cleaning the floors, meaning the factory foreman, meaning the security guard, okay, meaning the mechanic that comes in to fix the machines. They are all indirectly related to making the product. The only direct labor that you got is what I explained to you. The direct labor is the workers who are busy on the product, the line workers, right? Then, with your indirect material is your consumable stores. So for that, you're actually also going to draw a T just like this. You're going to have your consumable stores because you want to see how much of the consumable stores is the expense. So you're also going to have an opening balance and a closing balance. And those are my consumable stores on hand. Remember at the end of last year I counted, 7 bottles of Handy Andy wasn't used. So this year I start with that 7 bottles. Then I buy extra bottles of Handy Andy, right? And then, remember, I have the part that is left the end of the year, and that which is not left is what is used. And that which is used, they will divide according to where it was used. You see? So I will either take it to factory overheads, admin, selling and distribution. So it will actually be closed to all 3. Factory overheads, admin, sales and distribution. The ones that's used. Does that make sense? Okay. So now I need my expenses, I need the people making it, and I need the material to make it. And all of that contributes that I get finished goods. And the finished goods goes to my finished goods stock. So again, picture for yourself a factory where you have three parts. You have a part where they store the raw material. You have a part where everybody's busy as bees. Ne? Then you have a part where people come in. It's a display room. This is where all the finished goods, and it's also a storage room where all the finished goods are stored before they are being transported to the different traders. Right. So I will definitely have an opening and a closing balance, because there will definitely be some of the stuff that's not sold. Okay, so the stuff that I didn't sell from last year's stock, plus the stock that I have just finished. Can you see? It's this. Stuff that I have just finished, right? And then, what will make my final stock less? What is the goal of making this stuff? To sell it. To sell it. And now I'm asking you, what am I going to put this on? Cost of sales. Cost of sales. Why not sales? Because work in process, that finished goods that went there, this is at the cost price, the price they cost me to make. So I show the cost of sales on that side. In other words, in my cost of sales T account, I will now have final goods on this side, and then I'm going to close it to the trading account. You remember that whole closing transfers. Mm-hmm. And can you see why I'm saying factory overheads in the end forms part of your cost of sales after a long process. Okay. Now, before I take questions, I want you just to go look. I also gave you, if I can find my papers, a format. Okay. So you will see that in manufacturing, they ask it in two parts. The first part of the question will be accounting. So it will literally be, they will ask you either the production cost statement or they'll ask you some of the notes. They love asking the production cost statement. They love asking your factory overheads. And they love asking this here. Okay, but most of the time they don't ask this as a note. You have to use this thing to calculate this thing. So let me quickly show you how they work the same as your T accounts. Okay, before I go on, let me quickly answer. Okay, so now look at this. I've got a production cost statement, and I'm telling you, the production cost statement is basically the work in process T account. Same information. So let's see, they start with the direct material cost and the direct labor cost. It would be, if I go to my work in process, the direct labor and the direct material. You see? It's the T account. Just very important, your direct material is the ones that is issued to work in process. And can you see, here's the note. Now remember what T I did. I did the T somewhere. Yeah. Can you see? Opening balance, closing balance, buying, giving to work in process. Can you see? Opening balance, net purchases, meaning it's what I buy less what I return. Okay? Carriage and customs, less closing gives me direct material costs, which is the material that is issued. And that's the amount that will go here. Okay. You did last year, you did it in T accounts, you didn't do this statement. Okay. Direct labor. I want my gross. I want my gross and contribution. Can you see it's the amount that would usually go into my income statement? Okay, And you will see again they've got a note for it. And there they say factory wages, and then they have all the contributions, gives me direct labor cost. Okay. Now when they add that up, it gives me primary cost. Now at this stage, at this format, they bottomize it, but can you see they can also block and top it? Yeah. Meaning they can say primary, direct material, direct labor. Okay. Then I've got my factory overheads. Next. Can you see? Here it is. And this is just the example of all the things that can be in here. Okay. But what's important is your indirect material. This is your consumable stores. Your indirect labor is usually of the cleaner of the factory and the factory foreman. What's another name for a factory foreman? Manager. Okay. It's usually those two. Okay. Can bad debts go in here? No, because bad debts, selling and distribution. Can advertising go in here? No. So that's what they do, is they will give you a list of expenses, and it's just as important to leave out the ones that shouldn't be there than to put them in, because it's a -1 for every one that you put in that should not be there. Okay. Now, can you see? So I say direct material plus direct labor equals primary cost. Your most important cost that you can't do anything without. Then you add factory overheads. Now I've got my total manufacturing cost. Okay. Now, can you see? Work in process, the beginning of the year. Work in process, the end of the year. It's a minus. Gives me cost of production of finished goods. Listen to me. Please do not mistake this. This is not cost of sales. It's not cost of sales. This is the cost of everything I made. Meaning, if I go look at my T account, it's this one here. This one. That one. Write the words for yourself. It's the cost of production of finished goods. So can you see what they do? Is they will give you information that you have to do a T account. They will give you final stock, the opening and closing balance, and they'll give you the cost of sales. So then you have to do a T account to balance on work in process. That work in process is the cost of the goods that you just finished making. Does it make sense? Doesn't mean I've sold it. It just means I made it. And can you also see, the same as with inventory, for every product that you produce, you'll do a separate production cost statement. Because the whole purpose of this is to see the cost of the product. Okay, so in other words, you won't have just one cost of finished goods T account. If you have 3 different products, you'll have 3 finished goods, which all close to cost of sales. You get what I'm saying? Okay. Now, the second part of the questions, I told you now.
Remember,
the first part, yes?
Where do we get cost of sales?
They'll give it to you. They will either give it to you by saying you sold. So how they can give you cost of sales, can you see here? Opening stock minus closing stock, right? Cost of finished goods produced during the year. Can you see this here? This is the amount that goes to the production cost statement. This is the thing that goes here. Ne? And there is your cost of finished goods sold, meaning your cost of sales. Okay. Now, they can give it one of two ways. They can always give it to you by giving you the markup. So they say, oh, the sales was 1 million and the markup is 20%, then you calculate cost of sales. They can tell you the units sold, ne? And they can tell you and the price per unit, ne? The cost price per unit, not the selling price. The cost price per unit. Okay? So then you can calculate it. Or the one that they like is they ask you to do the finished goods T account. So then they give you the opening balance, they give you the closing balance, they give you info to calculate the cost of sales, and then you balance on the amount that goes to the thing here. Then what they do is they don't give you the closing balance, then you have to work it back. The reversing thing. They love reversing. Yeah. Okay, so that's the first part of the question, is this. The second part of the question is the break-even point. You remember the break-even point? Yeah. Yeah. So that's the second part of it. Okay.